Thank you. Good afternoon, everyone. Okay, I would just cover very briefly about the topic, anti-money laundering regulations, and the FATF, which we pronounce as in Singapore as FATF framework, and the challenges of over-compliance and financial exclusion in the Global South. Because it's rather technical, I will just briefly touch on the framework and regulations. Okay, so the Financial Action Task Force, FATF framework, is established in 1989 by the G7 countries, and it launched its framework in 1990 with the first 40 recommendations that set global standards to combat money laundering, terrorist financing, and proliferation financing. Oops, sorry. Do I point here or point there or point? Okay, I don't use the clicker. Okay, so what is a FATF framework? FATF framework incorporates the recommendations, and it outlines measures countries should implement to combat money laundering, terrorist financing, and proliferation financing. So due to the diversity of national legal systems, the FATF recommendations offer unified standards that countries can adapt and fit their legal and institutional frameworks. So to support this, the FATF has developed a risk-based approach allowing countries to adopt flexible measures within its framework. This enables more effective allocation of resources based on identified risk. So first, the country has to identify your own risk, and then you allocate your resources how to tackle that risk. This risk-based approach under FATF guidance requires the authorities, lawyers, notaries, and other legal professionals to identify, assess, and understand the risk that they are exposed to. So as a result, lawyers have to now invest in resources and training to understand and manage money laundering and terrorist financing risk relating to their services, their clients, jurisdictions, and existing controls. The core idea of a risk-based approach, which is RBA, is to allow each country to adopt a more flexible set of measures to target their resources more effectively and apply preventive measures that is commensurate with the nature of the risk so that they can focus their efforts. So it's not to stamp out everything, but you are supposed to measure your risk and tailor it accordingly. The RBA framework, basically, if you look at the top line, so first you go with risk identification and assessment. So you got to assess for yourself. Like in Singapore, it was assessed that lawyers who do convincing work tend to be the large proportion of people where money laundering tends to find its way in their transactions. After you have identified and assessed, you have a risk management and mitigation consideration, and that's where you apply your measures, and then you have ongoing monitoring. You put policies and procedures and information systems in place in your firm, in the transactions that you do, and most importantly, also documentation. You have to document your risk assessment. So for instance, if you find that this client, you're not quite sure whether or not he is 100% suspicious, and you feel that it is appropriate to continue to act for the client, notwithstanding in some jurisdiction, you can file a suspicious transaction report. You must document the risk assessment. Your firm must have a strategy, and you must have a policy and procedures in place to monitor and manage and mitigate this risk, because a client can give you additional information that will either ease that suspicion or increase your suspicion such that you would take other drastic steps. So, so the challenges of overcompliance and financial exclusion in the Global South. So any country below the red line are considered Global South. Those above the red line are, generally speaking, the G7 countries. And is defined in the Cambridge Dictionary and World Population 2025 as some of these countries. So what is overcompliance? Overcompliance is, I think the earlier speaker said, rules-based, applying an overly cautious, non-proportionate AML, this is CFT, means countering financial terrorism, financing terrorism, safeguards, when providing financial services. Okay, what happens is that you can exclude legitimate consumers and entities from a financial system, and these entities will end up being underserved and also causing an increased cost of their access to these financial services. So when these individuals and entities lack access to financial products and services to meet their basic financial needs, they are forced to resort to cash and unregulated channels, which then undermines the purpose of the whole FATF regime and framework, because it actually ends up increasing the risk of crime. Okay, and that is known as financial exclusion. Okay, so what is the definition of financial exclusion in the FATF guidelines 2025, which is just recently given this year, is that when individuals and entire groups are unable to access formal financial services such as banking, credit, insurance, and this is typically for marginalized, low-income, remote, undocumented populations in the Global South. And because these populations are underserved, they may have to access money or value transfer service provider, but they are not a bank. And this individual is actually given more barriers because they have no means of meeting the documentary requirements. And this strict documentary requirements, say for opening of an account, can exclude workers active in rural areas or informal economy who are less likely to have wage slips, formal proof of domicile. So FATF's requirements is to recognize the impact of financial exclusion and consistently emphasize that the practice is not in line with the risk-based approach. So sometimes when countries implement, they look at the rules and they think of the solutions, but they are not addressing the financial exclusion impact on any individual or entity. So in 2014, FATF issued a statement clarifying that the wholesale cutting loose of an entire class of customers without taking into account their level of risk is actually contrary to the risk-based approach. So what is financial inclusion then? Okay, financial inclusion means that there is a goal to design the measures to meet without compromising the purpose of combating crime. So for instance, some financial inclusion requires both the government and individuals to access active use of adequate suite of regulated, appropriate, safe, convenient, and affordable financial services by individuals, including households, and that these entities would benefit from such services. Okay, and there is also a tendency to have the wrong assumption that people who are underserved or undeserving people who are excluded from the financial schemes, and they are actually less of a risk, and that is actually not necessarily true. So in Singapore, for example, in our Monetary Authority of Singapore, MAS, we developed an enhanced financial inclusion for high-risk individuals. So these are ex-offenders who were involved in serious financial crimes. So they were allowed to open bank accounts to support basic banking needs, like for their salaries, the bills, government payouts, And an enhanced monitoring was placed to allow funds to be paid into the account from pre-approved sources. Oops, sorry. And any bank who refuses to open an account for the individual must justify their decision, and there must be clear communication required for rejections or closures, and there must be an appeal process with the contact details given by the bank for any rejection. Okay, so this is an example. So over-compliance and de-risking is a situation where financial institutions de-risk, as what President Prashant had said, by cutting off entire client groups to avoid penalties. So this has the impact of affecting entire sectors like NGOs, remittance providers, and small businesses. And lower income migrant workers and the disadvantaged are pushed into informal channels, increasing costs and security risk. So, so there is some limitation in the FATF framework. It was launched in 1990 and generally drafted more applicable for the global north priorities at that time. And the standards were shaped by US, UK working needs and not necessarily aligned with the needs of the global south. So the developing countries now face growing compliance burdens limited by the relevance to local realities. So, but then, as I said earlier, for a FATF framework, right, it is not meant to stamp out all kinds of financing, because trillions of illicit funds are still moving through the global system. Is with proper framework in place that are appropriate and moderated, they have limited avenues or slightly less limited avenue currently to move these illicit funds through the global system. So there is a lot of pressure given because there is a grey list which results in countries or monetary authority of Singapore, for instance, fostering over-compliance. So banks tend to have a knee-jerk reaction to respond with a zero-tolerance policy, and they prioritize safety over fairness, and that is what we know as systemic exclusion, especially in the global south. There are some collateral purposes that come about. So sometimes there is politicization of FATF. So some authorities can use FATF to silence critics, lawyers, and journalists. And there is also a civil asset forfeiture methods that unfortunately bypass due process required under criminal law and weaken legal safeguards with a lower burden of proof, because you can seize these illicit assets and is usually retained by the government. So sometimes regulatory measures may reflect geopolitical interests rather than purely technical standards. So, and developmental costs for the global south. So these are the various difficulties. So I think you can read for yourself, just to go faster. And I think there may be some need to reform. I think it was confirmed by the earlier speaker that we need to contextualize AML standards to ensure that they are proportionate, socially relevant, and do not penalize lawful activity or marginalized groups. I think inclusion must go alongside with the regulatory framework, so you must create something for a certain group of people, at the same time require them to comply with certain FATF requirements. There should be greater representation of the people of Global South. And there is also the other end of the spectrum where people who are sophisticated have got no problems with giving documentation. So you have people generating invoicing like trans-country invoicing, trade misinvoicing, tax avoidance. So the better method is to obtain and adopt a balanced evaluation matrix that measures both compliance and financial inclusion. So what is the role of the lawyer? We should advocate for proportionate regulation that protects the innocent and promote fairness, support NGOs and civic actors against misuse of AML rules for political repression, call for greater transparency and accountability for FATF decision-making processes, and, as I said, promote the integration and inclusion with compliance matrix, and defend due process and challenge legal tools like civil asset forfeiture that undermines legal safeguards. Okay, so I would just talk very briefly, very quickly about in Singapore, our experience as a legal profession was that there was a requirement earlier that has been amended last month that whenever you file a suspicious transaction report, you must discharge yourself as a solicitor acting on the matter. That gave a lot of difficulty for Singapore lawyers because you can be in double jeopardy. You can end up getting into professional difficulties with your client because they'll file a complaint against you, and yet you are not allowed to tell the client that you have filed a suspicious transaction report because that's tipping them off. So lawyers were between a rock and a hard place and had to find a way to discharge themselves without bringing up why they really wanted to discharge themselves. So that is something I think we should avoid. So in July, there were amendments to our statute to say that you can continue to act for the client if you file a suspicious transaction report, but you must do enhanced monitoring and you must document your reasons why you still take the view that you can continue to act for the client. Then, of course, you should think about discharge if more evidence comes out. So this is just one of the experience that we have. Thank you.